Ladies and gentlemen, good day, and welcome to MTAR Technologies Limited Q4 FY25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Vidhi Vasa from MUFG Interim Investor Relations. Thank you, and over to you, ma'am.
Thank you. Good morning, everyone. On behalf of MTAR Technologies Limited, I extend a very warm welcome to all the participants on Q4 and FY25 earnings discussion call. I hope everyone had an opportunity to go through our investor deck and press release that we have uploaded on Exchange and the company's website. I would like to give a short disclaimer before we begin the call. This call may contain some of the forward-looking statements which are completely based upon our belief, opinion, and expectations as of today. The statements are not guaranteed for our future performance and involve unforeseen risks and uncertainties. With this, I would like to hand over the call to Srinivas sir. Over to you, sir. Thank you.
Hello and good morning to everyone. Thank you for taking the time to join us today. Today in the call, I am joined by Mr. Guneshwar Rao, Chief Financial Officer, Ms. Srilekha Jasti, Head Strategy and Investor Relations, and Orient Capital, our Investor Relations partners. We have uploaded our updated investor deck, press release, and results highlights on the stock exchanges and company website. I hope everybody had an opportunity to go through the same. We are pleased to inform you that we have delivered a growth in FY25 with revenue from operations at rupees 676 crores, representing 16.4% year-on-year growth, and EBITDA of rupees 120.9 crores, demonstrating 7.2% year-on-year growth. The growth in revenues is primarily driven by increase in wallet share with existing clients and addition of products from new customers. Our margin is slightly lower than the estimates by 200 basis points because of certain spillover of execution of few projects in aerospace and defense to Q1 FY26. In FY26, we look forward to a 25% growth in revenues on a conservative note with 21% EBITDA margins plus minus 100 basis points. We anticipate a sequential improvement in EBITDA margins in FY26 due to operating leverage and scale-up in production of new products developed over the past couple of years. Notably, we have successfully executed proto units for various multinationals, and additionally, we are also working on first articles for leading multinationals like Fluence, Weatherford, IIG, Healthcare, etc. We have secured orders worth 720 crores in FY25, for which rupees 178 crores are from aerospace and defense, which is a substantial improvement in this area, and rupees 349 crores of orders are from clean energy, underlying our technological leadership in these sectors. In clean energy, we have delivered around 417 crores of revenues. The company is presently working on increasing the wallet share with the customer in FY26. That is going to boost the revenues further in the vertical. In fabrication, hydropower, and other segments, we look forward to deliver around 60 crores of orders this year. We have completed the execution of Proto 1 for Fluence Energy and currently working on Proto 2. And we are currently in discussion with Fluence for orders related to mass production. We look forward to growth in clean energy at the rate of 15 to 20% in this sector, including fuel cells, hydropower, battery storage systems, and others. The aerospace and defense sector has witnessed significant progress in several key projects to ISRO, DRDO, and MNC Aerospace, including the successful delivery of ammunition boxes, engine components for various customers, including Thales, GKN, Elbit Systems. We delivered around 93 crores of orders in this division. The aerospace and defense sector is in an exciting phase, supported by Make in India tailwinds and strong export interest. We anticipate a phenomenal growth of 80% from this sector in FY26. We have registered revenues of around 19 crores in civil nuclear sector in FY25 as against 157 crores of closing orders. We are in advanced stage of executing nuclear orders currently, and we look forward to deliver around 60 crores of orders in this sector in FY26. Tiger 5 and 6 reactive orders have been placed on the private entity, and we are expecting the order soon as we are pre-qualified vendor for NPCL. We started receiving tenders for refurbishment of reactors. In addition, we have also started working on budgetary quotes for 220 megawatts Bharat modular reactors. We recorded 148 crores revenue in products and other verticals, and we expect a 20% growth in this segment as well. The company is actively working on increasing the product base and expanding the customer portfolio. We have achieved a significant improvement in operating cash flows by generating cash flows of rupees 101.3 crores in FY25 as against 57.4 crores in FY24. In addition, we have reduced our net working capital days to 229 days, and we expect to improve our cash flows and net working capital days further over the coming quarters. Successful delivery of first article orders for various new products across all sectors underscores our execution capabilities and commitment to operational excellence. The company continues to focus on quality, innovation, and process excellence to drive long-term shareholder value. We are optimistic about robust order inflows over the coming quarters that will strengthen our order book. Furthermore, we are in discussion with multiple customers in clean energy, oil and gas, and aerospace sectors to enter into a long-term contracts. The company has also entered into long-term contract with some of these few domestic companies for execution of 20 crores year-on-year over the next 5 years. Our consistent revenue growth over the past 5 years demonstrates sustained growth momentum, and we remain confident in our ability to maintain this growth trajectory with an average growth of 25% year-on-year over the next 3 years due to multiple growth engines across various sectors. Our CFO, Mr. Guneshwar Rao, will discuss in detail of the financial performance for FY25. Over to you, Mr. Gunesh.
Thank you, Mr. Srinivas Reddy, and good morning and a warm welcome to our earnings call. I would like to extend my gratitude to all shareholders for your trust reposing on our company. Today, I will be discussing key financial numbers for Q4 FY25 and FY25 on consolidated basis. Coming to quarter-on-quarter YOY, revenue from operation stood at 183.1 crore in Q4 FY25 as against 143 crore in Q4 FY24, which resulted in 28.1% increase. EBITDA reported at 34.2 crore in Q4 FY25 as compared to 18.2 crore in Q4 FY24, with an increase of 87.5% increase on YOY. Profit before tax stands at 18.6 crore in Q4 FY25 as against 7.2 crore in Q4 FY24, 159.6% increase on YOY. Profit after tax was at 13.7 crore in Q4 FY25 as against rupees 4.9 crore in Q4 FY24, 182.7% increase YOY. When coming to yearly numbers, in FY25 versus FY24, our revenue from operations stood at 676 crore in FY25 as against 580.8 crore in FY24, 16.4% increase in YOY. We would like to inform you that this is highest ever turnover in our company we have achieved in FY25. When comes to EBITDA, reported at 120.9 crore in FY25 as compared to 112.7 crore in FY24, 7.2% increase in yearly YOY. Profit before tax stands at 771.6 crore in FY25 as against 73 crore in FY24, 2% decrease year on year. Profit after tax was at 52.9 crore in FY25 as against 56.1 crore in FY24, 5.7% decrease in YOY. I would like to also add key strategic focus areas. So the company has been strengthened its financial position with a reduction of 15 crore long-term debt, bringing it down from 142.4 crore to rupees 127 crore. So the total repayment obligation for FY26 is at rupees 46 crores. 80% of the long-term debt, whatever we have, we are repaying by FY27. The balance will be in the next 1-2 years we are repaying. Cash flow from operation was robust at 101.3 crore for FY25, improved compared to FY24's total annual cash flow of 57.4 crore. With our daily monitoring of the working capital and other areas, focus areas. When it comes to working capital, the net working capital to revenue days stood at 229 days in FY25. And also we would like to further try to reduce working capital for FY26 to 200 days. So I also want to add, the company is in the key sectors we are catering as on today. India's engineering sector poised for growth driven by government initiatives promoting renewable energy, civil nuclear power and defense indigenization. MTAR, its diversified portfolio and engineering capabilities, is well positioned to capitalize these opportunities. In civil nuclear domain, we have a clear visibility to support India's nuclear energy expansion to 100 gigawatt by 2047 with its new reactor approvals, retrofit programs, of which 5 reactors are set for refurbishment, for which we are receiving inquiries from the customer. In aerospace and defense, we are seeing a positive outlook from our operations as explained by our MD, and in our new unit which was commissioned in FY25 is set to witness exponential growth in line with government focus on self-reliant India and in defense and also the global procurements by Tier 1 and foreign OEMs. We have continued our engagement with major defense OEMs and PSUs by participating in Make in India defense tenders which are gaining traction with increasing budgetary allocations. Looking forward, the conservance of national priority sectors of clean energy, civil nuclear power and defense self-reliance is creating favorable environment for engineering companies like ours. So we remain committed to sustain EBITDA margins 21% plus or minus and with 25% revenue growth in FY26. So with this, I open the floor for discussion and welcome any questions if you may have. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Vipraw Srivastava from Phillip Capital. Please go ahead.
Hi, sir. I'm audible, right?
Yes.
Yes, Mr. Vipraw, you can go ahead.
Sure. So quickly on the guidance part, I missed the nuclear guidance. So what kind of growth are you expecting in the nuclear segment for FY26? Hello?
I was on mute. So FY26 is going to witness a substantial, we closed the order book at 155 crores for nuclear, but it will witness a substantial inflow of orders during FY26. One is we have already received tenders for the refurbishment of 5 reactors, couple of reactors from Tarapur, and refurbishment of reactors in Kaiga, Rajasthan and MAPS, Madhya Pradesh. So these tenders we are supposed to quote by next month, and we're expecting those orders because we have worked on this refurbishment of reactors in the past in a big way, so we're expecting substantial orders to come in from the refurbishment of reactors. And secondly, also the purchase order for the private entity MEIL has been released by NPCL. Since we are qualified vendors, as I mentioned earlier, we are going to expect substantial kind of orders coming in from there as well. So we're looking at at least around 700 to plus crores of orders flowing in from nuclear division. So we have enough on our plate to have a consistent growth in these areas, but we have not considered any of these orders in our current business plan for FY26. So what we have considered is what orders we have on hand as of today is what we have considered in our growth plan for this year. But we'll have a substantial exponential growth in nuclear division moving forward, including the budgetary quotes we have given for Bharat modular reactors, which NTCL has asked us for the 220 megawatts. So that's where we stand.
Yeah. So nuclear will be more or less flat for FY26. Is that correct understanding?
No, actually, to add your point, is like from 19 crores, what we have done in FY25, we are expecting to do 60 crores in FY26. From 19 to 60 crores. That is also whatever orders we are having in hand.
60, right? 60 crores.
60 crores we are planning for FY26.
Okay. Okay, sir. Noted. And sir, in the products division, what's the guidance you have?
Product division, I think we have done, last year we have done around 148 crores, and we should have a growth of at least about 20% in this area. And we have developed various products, and we have improved this substantially. If you look at in the last 3 years to now, there is a huge growth in this area, and we continue to do that. So our team has been working on various products which are getting qualified, where we are doing first articles. Some are related to government organizations. Like roller screws were already qualified. Technically, we're just waiting for the final confirmation. So we'll be to be a 100% import substitute for Government of India for this sector. We have been importing from railway Sweden. So we are working on a lot of products like EMAs, electromechanical actuators and all that. So we should have at least about 20% further growth on the product division for this year.
Okay, sir. Okay. Noted, sir. And so lastly, on aerospace and defense, you have, say, 80% growth, right?
Mm-hmm. So I would like to explain that. So this is an area where we are growing substantially well, and it's something which is very interesting. If you look at the company's position in FY24, we were about 9 to 10 crores of business in this sector. In FY25, we have done 48 crores. Especially with our new unit which was commissioned in Hyderabad. And then in FY26, we'll be looking at least about 145 crores of revenues being generated. So this is growing at a rapid pace. The main reason is we are qualified and certified by a number of MNCs for exports in this area. And we have successfully executed various first articles. Now they have gone into the ramp-up production for these areas. And some of the customers where we have entered into long-term agreement with IAI, we have now already started working on the first articles which will get converted into mass production as well. So there is a substantial improvement in this area where the margin profile is also very good. So they're all very complicated kind of assemblies which we are working on, and this is something which is really exciting us moving forward. Apart from this, we are also looking at various aerospace projects which we have been asked to work upon in terms of RFQs, which is not part of the discussion right now. So as and when we have some traction on those things, we will obviously inform all of you on in that particular segment.
Right, sir. And the last question from my end, regarding Bloom Energy, sir, what's the commentary from their end? Because Bloom is seeing a lot of traction in the US. So what are they communicating to you regarding their order book and their growth prospects?
No, it is more or less, see what they have done is they have improved their wallet share also they want us to increase. So we are now doing additional assemblies for them within the system what we are making for them, which we are going to start executing it from this quarter onwards, which will ramp up in the subsequent quarters. So what we have mentioned about 4,000 units which we are going to dispatch to Bloom with additional wallet share is what's going to happen this year. And there's no change in that. There might be further improvement on that we have to see. So ultimately, the kind of guidance we have given in terms of growth and margins, we have factored every instance of what external to the company. For example, the tariffs issue which is going on with United States, we have considered all those factors in arriving at this particular growth percentage. And we feel that because of our diversification into various countries and exports, we are in a position where we are still able to maintain that growth and achieve the, margins that what I have mentioned, 21% plus minus 100 basis points. And this we have considered all the factors, and any other factor which favors the company, then we'll be able to improve much better on what we have said.
Sure, sir. Thank you. I'll join back with you. Thank you.
Thank you. The next question is from the line of Meet Jain from Motilal Oswal. Please go ahead.
Hi, sir. I'm audible?
Yeah, you are.
Hello. Yeah, sir.
Yeah, you are.
So, my first question is on the spillover that we talked about. Can you throw some more light on this? Like, it has been during because of the last. What was the factor behind the spillover, and can we expect this in 1Q? And because of that, can we see a better margins in 1Q as compared to last year?
No, basically, what I can say is that one is the spillover is one on the domestic side, because if you remember, we are working on the semi-cryo engines, which there have been certain corrections, certain design changes. So now we are trying to finalize that. But more or less, there has been a little bit of a pause on certain export shipments as well because of if you remember, the April 2nd announcement by the United States on tariffs. So they wanted to wait and watch and see. But post that, once the 90 days pause was released, then the situation became normal subsequent to that. But we have considered all those things in the subsequent quarters. As I mentioned, we factored everything which is external to us to achieve at the growth and the EBITDA percentages. And what you will see here in the current year is you'll have a linear quarter-on-quarter growth throughout the year, and as well as the EBITDA margins. So that's how it's going to be. And we're also working on reduction on outsourcing, which we are getting qualified for the certain products which we are outsourcing for the coatings. We are going to get qualified for that, so there'll be reduction in the other expenses. And we have actually, if you remember, all of you remember, we have worked on investing not only in terms of capabilities, but also in terms of having the right management bandwidth, right from different levels in the company across the board, keeping the future growth in mind. So we have done that, and we are in good shape to take the company forward over the next 3 years in terms of our growth, and as well as the improvement in margins quarter-on-quarter and year-on-year basis.
Understood. So when we see other companies, other export-heavy companies to US, we have seen a huge outflow in 4Q in the anticipation of this tariff. But when you say in our case, we are seeing a pause by some of the customers. So just want to get some more clarity, because of the anticipation of tariffs, the shipment from India to US has seen a massive increase across the industry. So that has been the case for us, right?
No, it is not the case. See, pause means there was not technically a pause, but there were few more shipments they could have taken, but not that it really affected us, because there was a marginal 20-25 crores plus difference in terms of the revenue that we could have generated in additional, in terms of domestic, and a few shipments in terms of export. So that's where it got deferred by a few days. Not that it stopped, but post April 2nd again it continued, and it's in the normal routine right now. So that's what it is, and that's why I said that we have considered all this in the current year also. We have factored all these variables in our guidance for the current year as well.
Understood. In terms of our fuel cells clean energy guidance, can you just, I didn't get that point. Can you just reiterate what kind of guidance are you giving for FY26 for this fuel cells?
See, fuel cells, we are looking at almost like the hot box units. I can't spell out the number of boxes and all that based on the customers' feedback to us. But we are growing we'll be growing at a rate of 20% compared to the last year, what we have done. We have done around
20% in FY
450 crores
26.
less last year, so we'll do around 20% more this year.
So, will this include any electrolyzers orders? So what kind of orders are we getting for electrolyzers from them?
We have not included the electrolyzers orders as of today. So this is what I'm trying to explain, that we have taken the position as of last week, is what I'm talking about the numbers. So we are obviously, the electrolyzers orders come in, then it will add on to the numbers what we have said, but we have not considered that as of now.
Understood. And lastly, on this other expense part, we have seen an increase in other expense in absolute terms in this quarter. Any one-offs in that?
Yeah, because if you look at it, the majority of that is the plasma coating, which we are doing in US company called Progressive. And now we have done the samples, we have given it for lab testing, and we are expecting the qualification to be done over the next 1 month. Once we do that, then our outsourcing will drastically come down, and we'll be able to supply without any kind of outsourcing expense. So we'll see some kind of reduction happening partially this quarter and subsequently for the next 3 quarters. So we are looking at that as well, and that's the majority of that is the outsourcing part of it.
Okay. Thank you so much, sir. I'll get back to the team.
Thank you. The next question is from the line of Bala Murali Krishna from Oman Investments. Please go ahead.
Good morning, sir. So regarding
Good morning.
guidance, what 25% we are expecting, but in case of nuclear sector and aerospace and defense, we are expecting substantial increase. So the clean energy sector, I think there may not be much growth in this year, right?
Oh, we have the growth. That's what I mentioned earlier. In the clean energy, we're looking at about at least 20% growth this year in the fuel cells, in the high power, and those areas what we're working upon. And the nuclear, we have not considered any of those orders which I said which will flow in this year, substantial orders. See, one good thing is that now it's already done in terms of Kaiga 5 and 6, the purchase order has been released to NEIL. Now they are working with us in terms of finalizing various contracts with us. That process is going on right now, and then the refurbishment of reactors. So we are looking at anywhere between, I don't want to spell out individual numbers because of certain confidentiality, but we are looking at around 700 to 800 crores of orders flowing in over the next 1-2 quarters. So this, we have enough on our plate, and further we're going to receive further orders as well. So we have enough on our plate to exponentially grow in the nuclear division moving forward, and we have the capacities to handle this as well.
Okay, sir. So last year, I think in previous year, we were expecting to close the order book by 1,500 crores, but we end up around 1,000. So this year, what could be the expectations from the closing order book, considering all these factors?
Look, as I said, whatever number I gave, we'll have a very strong order book because when we said 1,500 crores, we factored in Kaiga 5 and 6 orders coming in, but that's getting deferred to this and the subsequent quarters, right? And also the refurbishment of reactors. And then we'll be getting substantial orders from aerospace division, which we are doing extremely well right now. Then the space sector as well, defense as well is doing really well. We are doing substantially well in various areas. So we'll have a very strong order book, and we'll be able to further crystallize the closing order book for this year, probably a month and a half from now, once we have more clarity on all this. But we'll have a very strong order book by end of this year after executing what we mentioned right now.
Okay, sir. And this electrolyzer part, so I think there is some PLI scheme also announced on that one. So are we looking to participate in that one, that PLI scheme?
We have already done the electrolyzers. We have proven it, but as I said earlier, we are yet to receive any further orders on electrolyzers as of today. Once we receive it, then we will look at our numbers at that point of time. So we have not considered that as of now, which I mentioned earlier.
But I think there is some traction in the domestic market also because some PSU entities are very aggressive on this electrolyzers, hydrogen production. So maybe other than Bloom, maybe we have some other scope in the good scope in the domestic also.
To establish this, to be very transparent about it, will take time in terms of the facilities and the infrastructure that we need to build for hydrogen storage, various other aspects. So that is where we are right now. But good thing is we've already developed the product, so we're just waiting for the traction to happen internationally. So that's where you get the real volumes. I understand the domestic requirements, but that's something which I don't want to comment right now. So as and when something happens, we'll definitely inform all of you.
Okay. Lastly, on this new product we developed for the naval valves. So what could be the expectation from this product, sir, if it is go to the volumetric production or bulk production?
So the requirements are very high because we have developed it, designed and developed it along with the D&D naval area. So we are expecting substantial volume production requirements coming in from that segment in the defense side of the business. And that's what we are doing, right? Every year we keep developing these products and we'll see the traction happening subsequently in terms of volume production. So we are taking up, our product development team is taking up such products where it makes really economical sense in terms of having that kind of volumes moving forward. So what all you're seeing in our presentation is relevant to volume production moving forward. So those things, as and when they happen, they'll add on to our order book and the execution cycle, which we have not taken today, but it will definitely happen.
Okay. Lastly, on this Fluence Energy, I think there is no further update. Any progress on that deal?
No, we have already mentioned about the update. See, they have given us to do the prototypes. We have already done the first one. The second one is in progress, which we most probably try to complete in this quarter. Once that is done, then we move on to the batch production and volume production. So that's what we're going to do. So we have not considered any of that volume production or batch production in the current growth what we have taken, because we wanted to be very, reasonably conservative in what guidance we give. But that's in the advanced stage of discussion in terms of not only the completion of the prototypes, but also in terms of signing off the agreement with MTAR, which can happen this quarter or the next quarter moving forward.
Yeah, I think as per our earlier discussion, I think when they receive any orders from India, so that we are going to execute. So as of now, do they have any orders on hand from India for execution purposes?
No, that situation has changed right now, because what they're trying to do right now is that they're going to buy the skid and the pod, the entire assembly from us. And the batteries are going to be installed at the site. So now we are open to the whole market. So that's the big advantage. That's how they've changed the whole business outlook in terms of manufacturing in India.
That's a good news, sir. Thanks a lot. That's all from me.
Yeah.
Thank you. The next question is from the line of Utkarsh Maheshwari from Reliance General Insurance Company Limited. Please go ahead.
Good morning, sir. I'm audible?
Yeah, good morning. You are audible. Yes.
Sir, I think just want to understand our medium-term perspective in terms of how we are guiding and how we are delivering. I mean, this is like on a very pretty consistent basis.
Can you speak a little louder, because we're not able to hear you?
Yeah. My question is more from the structural thought process. I mean, from every time what we have guided, we have been running somehow short of our guidance. So this time, do you think that our guidance is like almost at the lowest point of the thought process, and maybe like we can outperform this?
That's exactly the idea. See, what you've said is right, but what you have to also understand is that we have done, over the last 3 years we have guided, but over the last 1 year there was some misses in terms of guidance. But the current financial year, we have ensured that we have given a situation of the worst case scenario where we stand in terms of various external, internal factors, and we have guided in such a manner. So you can be rest assured that what we have guided for this financial year is what we'll be able to achieve for sure.
And maybe like margins, so I mean, we were thinking like 24% or now we are guiding 21. So could this be the bottom, or I mean, we can expect some kind of outperformance from these margins? I mean, just want to understand the thought process.
So that's what I said. We wanted to make sure that we are making every effort to improve our operating margins and also our EBITDA margins. But we wanted to ensure that we guide in a manner that what we can definitely achieve, and probably if things go in the right direction, probably we'll do better than this, but we don't want to say that right now. But this is a basic minimum guidance. What we have given is a basic minimum guidance.
Okay, fair point. Thanks. That's it all.
Thank you. The next question is from the line of Ayush Bansal from Niveshaay Investment Advisors. Please go ahead.
Hi, good morning, sir.
Good morning.
Sir, like I wanted to ask, we make actuators for Tejas aircraft, right? And with more focus on indigenization and government planning to add almost 300 Tejas aircrafts. So how big opportunity do we see here? And like out of the 36 Tejas aircraft in operation currently, how many of it has actuators provided by MTAR?
See, the electromechanical actuators we have supplied to the defense, and they have actually tested it, and they have proven they performed very well. And in fact, they've also used our roller screws to test this EMAs, indigenous roller screws, and they also performed very well. They passed the load test, they passed all the relevant tests to do it. So this is what I'm saying. When we have developed the product, you can see the traction happening in terms of EMAs in a big way. And in fact, we had series of meetings with them recently as well because of the certain emergency procurements, what they're looking at. And they're looking at a lot more EMAs which are going to come in the way of MTAR in the current financial year and the future years as well. So when we talk about certain guidance, as I keep repeating that we have not considered any of these opportunities which are already developed by MTAR, but we still have to get those volume orders coming in from the defense sector, which will happen very shortly. So that is where we stand. So we have a great opportunity because we already executed it. We have proven our product. So we are right on top of it to ensure that we can deliver such EMAs to the defense sector moving forward.
And sir, like who are the other competitors providing the similar product, and how much do we contribute to a single Tejas aircraft?
No, we can't quantify how much we contribute, but when you specifically talk about EMAs, our EMAs have proven the best in the market in terms of quality, in terms of performance. That has been also mentioned by the defense sector. And we are in good shape in terms of delivering the maximum requirements for the defense sector, because ultimately they look at the quality and the performance of the EMAs. Most of the EMAs we were also importing earlier, and that also we have changed the whole scenario right now because of our capabilities to handle it. So we not only manufacture right from the basics, right from the component level to the assembly level to the entire system. So that's what we have done. So let's hope for the best in terms of getting the maximum kind of orders moving forward.
Okay, sir. And do you have any idea on LCOE of fuel cell versus solar, and how do you see demand for fuel cells shaping in the foreseeable time?
No, there is enough demand. See, that's why we are able to grow at that rate, right? We were 4-5 years back to what we are today. We have done a lot of innovations to make it to where we are right now. So it is growing at the rate of 20%. It might grow even further higher. So it all depends on how the market moves, but we are in good space as far as the fuel cells are concerned.
And sir, can you just comment what's the cost of a hot box and how technically difficult component it is to make? Like, do you see high competition or something?
I won't be able to comment on the numbers on the hot box because we've been asked not to disclose that by the customer because they have certain issues with that. But the entry barrier for manufacturing these systems is pretty long and it's not easy as well. So it's not that competition can be created overnight. It is not going to happen that way. For MTAR itself, it took a number of years to develop it and also to innovate various products that we are indigenized with. So that's where we are. So we are in a very good space as far as the fuel cell technology is concerned.
Okay, sir. Thank you. That's all.
Thank you.
Thank you. Before we take the next question, participants are requested to limit their questions to two per participant. The next question is from the line of Viprav Srivastava from Phillip Capital. Please go ahead.
Thank you for allowing me to follow up. Sir, quickly on the recent bill which has come up in U.S. where they are revoking subsidies for solar. So any thoughts that does it impact MTAR and Bloom positively and can it be a potential trigger for MTAR in the longer run?
I don't think so, because Bloom is in a very comfortable space right now in terms of their own order book and requirements. And we don't have any such information. And in fact, they're trying to increase their wallet share as well, which we are doing right now, as I said earlier. So I don't think we have any kind of effect or a trigger which might create an issue for us. So there's no indication of that as.
Sure, sir. And so secondly, quickly on the Fluence part. So again, Fluence also supplies lithium-ion batteries for US market. And if US market faces issues, do you see it having any repercussions on the Indian market, or are these two independent?
No, see, right now, as I said earlier, we are creating assemblies for them, excluding the batteries for now. They're going to do that at site. So that opens up the entire market. That's what Fluence is looking at. So it's a new design of theirs, which we have designed and developed it along with them. We have successfully completed the first prototype, and now we are moving on to the second prototype. And once that is done, then we move on to the batch and production and then the mass volume production as well. So we have to create mostly, as I said earlier, the finalization of all this will happen either in this quarter or next quarter, where we're going to sign off a long-term agreement with them before we get on to the volume production.
Sure, sir. Thank you. Thanks, sir.
Thank you. The next question is from the line of Piyush Sevaltasani from Sundaram Alternates. Please go ahead.
Yeah, hi, sir. Thank you for the opportunity. So my first question is on the clean energy fuel cell side. So if you look at the guidance of Bloom Energy, it's much higher versus what we are guiding. So can you help me understand why are we being conservative, or we wait for more orders to come and then we see an upgrade there?
See, that's what I've said earlier. So we have taken, this is what we have guided the growth and as well as
Sorry to interrupt. Sir, there seems to be a disturbance in your line.
Yeah, can you hear me now? Can you hear me now?
Yes, sir, please go ahead.
I think my line is fine actually. But, okay. So what I've said earlier is that we have considered the guidance or the numbers based on where we are today. But over the next 1-2 quarters, many things can happen, but we have not taken any of those into account. So as of today, this is what we have done. This is what the guidance we have given as a base minimum. So the reason why we have done that is that we would like to make sure that what guidance we give, definitely we'll achieve that, and probably we might do better than that based on a lot of external factors, nothing to do with us. So a lot of good things are going to happen. For example, where it's Bloom or whether it is Fluence Energy, where we're going to sign an agreement. We have not considered various things, what we're already working upon. But as and when those things happen, then we look at it and then we keep informing our investors on a regular basis. So that's the game plan for this year.
Sure, sir. So my second question is on the CAPEX. We have done 100 crore CAPEX for FY25. Can you help me understand what was this done for, and incrementally, how should we see CAPEX moving, which segments, and what would be the quantum?
See, it depends. See, right now, this year, the basic minimum bottleneck areas, we're looking at about 50 to 60 crores of CAPEX going in, not only for the requirements, not for this year, but for the next year, the next couple of years. But if you look at the specific projects, like we're working on some very big projects, which I'm not able to disclose right now, but once those projects and agreements are signed, then it will be a separate CapEx required for that. We already have enough land bank, both in near the airport in SEZ and a few other land banks that we have taken. So these will be used not only for our future projects and for the expansion programs, which we have a roadmap over the next 3 to 5 years.
Sure, sir. So just lastly, on the nuclear segment, so the execution in FY25 was slightly on the weaker side. Can you help me understand why it was impacted? Was there any project delay or some clearance delay? And why are we expecting a jump to 60 crores in FY26?
See, basically, that's what we have dispatched, right? So we are working on two major projects. One is the FMDC and the fuel transfer systems, which are the long-term projects. We have done substantial work in that, which is under work in progress, and we'll be executing those projects for the current financial year. So even though the sales are at 19 crores, we have done substantial work in these long-term projects over the last 1 year, and now we're going to move on to start dispatching them in the current year and the subsequent year. So what orders we are going to receive, substantial orders, we have not considered that in our business plan for this year, but you can see a nice exponential growth in nuclear division since everything is right there on our table right now in terms of order booking, and execution will happen over the next 3 to 4 years. So we're looking at a pretty good exponential growth in nuclear division, which obviously got delayed, right, in terms of order booking because of the delays from various areas. But now it's already, the paperwork has started moving, and we'll be able to book those orders over the next 1 to 2 quarters.
Sure, sir. Thank you and all the best.
Thank you.
Thank you. The next question is from the line of Bala Subramaniam from Arihant Capital. Please go ahead.
Good morning, sir. Sir, earlier guidance of working capital days to a target of 175 days, what are the strategic initiatives we are taking it right now? Because right now it's about 220 levels.
See, we have guided working capital days 225 days for FY25. So we have achieved 229 days. 175 is a long-term goal. It cannot happen.
So I think FY27 target, sir, I think.
FY27, see, the moment we have the operating leverage and growth, we are expecting 25% year on year. And we are working closely on the receivables and inventory levels. Definitely that number can be achievable. And we have the calculations also.
Got it, sir. Sir, in that Middle East side, oil and gas, especially DNG and CapEx are picking up. And how's our business are doing in oil and gas? How the things are shaping up?
So we are working with the oil and gas customer where with Weatherford, we are going to execute the first article's completion in this quarter, by end of this quarter or beginning of next quarter. And mostly the agreement, a long-term agreement is going to be signed off most probably in this quarter itself. And then we create the required infrastructure once the agreement is signed off for batch and volume production. So that's going in the right direction. And that's something which we have not again created in our business plan right now, because that's how we have conservatively estimated our growth plan. So as and when it happens, we'll inform the investors about it.
Sir, we have taken a separate debt for this oil and gas segment, 60 to 80 crore kind of debt, or still
we have not yet taken that debt.
Okay, so when we can expect plan for this oil and gas, sir?
That's what I said. Mostly in this quarter we will be able to sign off the agreement, and once we do that, then the whole process will start. Because we are simultaneously doing the first article, which will be done by end of this quarter. And once that is done, then we move on to the batch production within our existing facilities. But for volume production, we have to create a separate infrastructure for them, for which we have the land bank. And once we do that, once we sign off the agreement, the whole kickoff will start off on the oil and gas, which will happen mostly in this quarter. We'll be able to sign off the agreement.
Got it, sir. So my final question on aerospace and defense, I think we have initiated development order for compression assemblies of scramjet engines. And so when we can expect volume orders for these hypersonic missile developments?
No, first we have to execute this transit engines. We have to do that. We are in advanced stage of that. The raw material has come in, the manufacturing is going to commence. The sooner we do that, the whole team is working on it. So once we're able to do that, then the progressively we'll be able to see a proper traction in this area as well. And that's a very highly sophisticated order which we are executing in terms of scram rate. So let's see how it goes, and we are on top of that issue. The whole team is working on it, especially right from the new product development team and the execution team. They're working on it to take it forward.
Got it, sir. Thank you.
Thank you. Ladies and gentlemen, in order to ask a question, you may press star and one at this time. The next question is from the line of Isha Murthy from IM Capital. Please go ahead.
Hello. Sir,
Hello?
can you provide me the guidance for clear energy, like civil, nuclear power, and aerospace and defense? And what are your plans to improve your cash flows?
So the improvement of cash flow, I think, GR, you want to answer that first, then I can go on that.
See, we are monitoring. See, as you know, once the revenues are increasing, profitability increasing, the internal accruals will be there. And also we are working on the working capital days also, closely monitoring them. So we have achieved 101.9 crores, but we are working with the lot of suppliers also to improve our credit period. So definitely every year our target is to make the positive cash flow from operations henceforth.
So the second part of the question is, see, we are into various segments, multiple segments as I mentioned earlier, and we are seeing similar kind of growth pattern happening in every segment, especially in aerospace and defense. We are seeing a huge traction happening there. We have created those facilities. Our products have been approved. Certifications we have received, including our special processes for aerospace, where MTAR can be a one-stop shop for various multinationals. They have been certified by NASCAP, which is a big achievement, which we receive a certificate now. So we have done a lot of work in terms of where we are today, in terms of moving forward with the right growth that we are looking at. So that's where we are today, and I should really congratulate the entire team to create that platform to have a consistent and good growth over the next 3 years with improved margins.
Okay. I also have one more question. You have indicated a sharp ramp up in aerospace revenue from FY26 and higher in FY27 as well. So what gives you the confidence in this steep growth? And also long-term contracts or visibility from MNCs already secured to support this scale-up?
Exactly. So the confidence level is, one is we have already done a lot of first articles and moved on to the volume production. In some cases, we are already doing the first articles and they're getting approved. We got the required certifications as well. And that's why you can see in the current year itself, in aerospace and defense, like it was not there before. As I mentioned earlier, in the aerospace sector, we did 9 crores and 45 crores last year, and this year we're doing close to about 145 crores. It's purely the effort of the team, not only to develop the products for these MNCs in the aerospace sector and getting it approved and certified, and that's what you're seeing the numbers growing rapidly, and we're also having the customer confidence in MTAR in terms of quality and performance, what we have already delivered. So these are the factors which have gone into it, and we have created the right infrastructure in terms of special processes and machining and assembly of these products for us to be where we are today and how we are growing in this sector.
Okay, sir. Got it.
Thank you. The next question is from the line of Ayush Bansal from Niveshaay Investment Advisors. Please go ahead.
Hello, sir. I had one more question, that back in 2020-21, we were sitting at gross margins of somewhat 67-68%, which now stands at somewhat 47-48%. So, can you just tell for this drastic drop of 20% in gross margin? Is this due to raw material cost or something else?
It's basically the product mix, right? So, earlier, the gross margins for the clean energy segment are lower, the volumes are higher, the operating leverage is much better. But if you look at the way we are moving forward, we have diversified into the aerospace and defense sectors in a big way, where the margins are much higher. So basically, the gross margins are also going to be higher in terms of these segments. And also, we are moving into the volume production as well. So you can see a better gross margins moving forward, as we move on in terms of diversification. And we are actually literally implementing it and executing those orders right now. So we can see that happening over the next 3 years with improved gross margins as well.
Okay, sir. Okay, thank you.
Thank you. The next question is from the line of Maitri Shah from Sapphire Capital. Please go ahead.
Yeah, hello. Am I audible? Hello?
Yes, you are. Yes,
Yeah,
you are.
I just had
Please
one.
go ahead.
I just had one question on the battery storage system. So we were developing and designing it. So where have we reached with the prototype, and has there been any qualifications that we've received from it?
Yeah, we have done the first prototype, so that's been approved by the customer, and now we are moving on to the second one with little bit more changes in the design. They wanted some improvements from their side, nothing to do with it. We're working together with the design and development. So once we do the second prototype, so that will be the basis for our batch production moving forward. That's what I said, and which we're mostly planning to complete it by end of this quarter or beginning of next quarter. Once we do that, then we move on to the batch production. Then all the designs will be frozen, and then we move forward for batch production and volume production.
Oh, okay. And what kind of expectations do we have from this product in terms of like revenue in FY27?
FY27 will have a substantial revenue, but I'm not going to, we'll disclose that more in terms of numbers once we sign off the agreement with Fluence, because we have to finalize the pricing and everything, because we are doing the prototype right now. But it's a fantastic opportunity for the company, and we are successfully executing the prototype right now. So, the market has also opened up because of batteries being installed at the site. So let's see how it goes. And once we sign off the agreement, we'll inform, then obviously we'll know the kind of volumes, which is, it will be substantial numbers that we're looking at.
Okay. And just one clarification. So you mentioned that we'll be growing at 25% for the next 3 years. Is that right? Did I hear that right?
Can you repeat that question?
At 25% for the next 3 years?
Yeah, that's right. Absolutely right.
Oh, okay. Thank you so much.
Thank you. As there are no further questions, I would now like to hand the conference over to Mr. Srinivas Reddy for closing comments.
So I would like to thank everyone for taking time to attend this call. And I would like to mention that we are continuing to work towards our growth and also to improve our margins on a linear fashion, quarter-on-quarter basis. Even the growth we are expecting to grow on a linear basis, quarter-on-quarter basis, year-on-year basis. And we are on track in terms of what we have done, which you cannot see in the form of numbers, but you can see moving forward over the next years what the kind of work we have done in the various segments that we are working on right now. Thank you so much.
Thank you. On behalf of MTAR Technologies Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.